Good evening, traders. This is Rich Derrick from Tradesight. This is the market preview for Thursday, February 14th, 2013. Today we had kind of a seesaw day back and forth as we're trying to get through the Wednesday before options expiration. We had some ups and downs, but at the end of the day, the ES futures closed about unchanged on the day, recouping some losses. The NQs were relatively strong for most of the session and did manage to close up 10 handles on the day. The Dow was the one that really stuck out, losing 35 on the day. That was only one of the big three that was really down by anything measurable. The intermarkets were kind of okay. The advanced declines were positive on the day, plus 500 on New York and plus a little bit on NASDAQ, but certainly nothing exceptional. The market definitely it's getting a little long in the tooth here on this advance without any kind of correction, but the trend remains up. So let's take a look at some of the charts. And here's our ES futures chart in the daily time frame. We're just a little bit above that plus 1/8 level. We're still into that moderately overbought area on the GAN box. I think the key takeaway for today, though, is that while we did close up on the day by a small amount, we do have a dark bodied candle on the chart here, which means that we did close below the open. Now this is coming a range high, and that can always be a problem for the market. So for tomorrow, definitely be on guard for some downside activity based off the recent price pattern. Here are the NQ futures. The NQ futures tried for a new high. They did record a new intraday high on the move, but they got kind of pushed back down into the real body range of that most recent breakaway candle out of this previous area. So there's really kind of nothing new technically other than that failed new high. So we're still above all three major moving averages, but really not picking up any kind of significant momentum. You can take a look at the MACD here, which has been essentially just flatlining here for the entire year more or less, after it worked off the initial gap up from the first trading day. So there's really very little momentum in the NASDAQ, and definitely keep your eyes open for two-way trade in the NASDAQ sector. The cumulative advanced decline line did make a new high, so we're still pointed higher here, so there's no divergence yet. The Dow was lower on the day, but the advanced declines were positive, so that's a positive intermarket technical, so nothing to be concerned about just yet. We will be keeping an eye on this, though, for a rollover. The 10-day trend remains relatively neutral, no real bias either way yet. We're starting to climb here a little bit, but we're still, basically midway between the oversold and overbought thresholds. Here's the NDX versus the SPX. We did tilt in favor today of the NDX with a slight outperformance there, but we're still really just in this mini range that we've been in for about 2 weeks now. So really nothing new to be learned from this chart. One chart I wanted to point out was that the relationship between the SPX and the BKX, that'd be the banks versus the broad market, is always very important. And when you start to see a divergence, you want to pay attention. We've had some pretty good leadership out of the banks. We recorded a new high here. The banks, the BKX, is represented by the blue line. We did have a fairly weak day in the banks. We'll talk about the technicals there later, but that was not kind of really supported by the overall market. We want to make sure this doesn't turn into a divergence where the banks start to roll over, and we're starting to see continued struggling by the SPX. So we're going to keep an eye on the BKX to see if this little bit of a downturn turns into a trend. All right, here's the multi-sector daily chart. Blue line, the SOX was relatively strong on the day, pretty decent performance there. As we just talked about, the green line here, a little bit of a turn down in the banks. The BTK took a little bit of a bounce, but I think the real takeaway here is that the XAU recorded another new low and is still acting as a source of funds. Now this is really starting to get stretched out pretty far here, and at some point here we're going to need some kind of a reflex back to normalcy. So keep an eye on this. This is starting to get pretty stretched out here. All right, here's a look at the OSX, which is still trading in this lateral range, kind of really being capped by this 8/8 level at 250 from the GAN box. Right now, the trend is really neither positive nor negative in the short term since the 10 EMA is so flat. We did have a fairly decent up day in the OSX, the oil services, but we're still just staging here below this 8 ace level. This was the top performer of the major broad market sectors, so keep an eye on this to see if we can actually clear this 8 ace level and push higher. Here's the BTK, which continues to struggle. It was relatively flat on the day, outperformed the broad market by a little bit, but this has had a pretty extended run and is really starting to struggle here with the MACD starting to level off here. Keep an eye on this MACD here to see if we get down to the 0 line, where a cross would imply some real negative momentum gathering. Hasn't happened yet. We're still just kind of sliding sideways. And here's the SOX, which recorded a new high on the move. It's pushing a little bit higher towards that 8 ace level at 437.50. Definitely has potential to get there. The bar count is okay. We're 9 days up now in the bar count, so keep an eye on this thing. If we get to 13 days up right in this 8 ace area, it's definitely going to be an area to take something off on the long side for some longer term things, and then to also start thinking about some reversal ideas. The BKX was relatively weak on the day, hasn't been able to really take a good hold of this 8 ace level on the newly shifted GAN box. We are now 9 days up in the seeker count. We had a down day today, so we released a little bit of that overbought energy. But keep in mind that pushing higher, at least initially, is going to be tough, and is going to make the high from today very, very important. And here's the XAU, which was the last lagger on the day. This is the first real close below that 0 ace level that we've seen so far. The trend remains down. We're below all major moving averages. We scale this here. Next real level supports 143 3/4, which is going to be -1/8 on the GAN box here. All right, and finally, here's the TLT. I wanted to bring this up today because the TLT has really, like the XAU, kind of been a source of funds for the money that has been flowing into the equity market. This is pretty far along here in the countdown as far as the seeker goes. We've got 1 through 9 in the setup phase completed. We did 1 through 12 here on the countdown phase, and now as of today, we just completed 13 bars down. The 13 will print tomorrow when the first tick hits the chart. But we're now 13 days down in the Tradesight seeker, so this is definitely a very key area to watch, and we're looking for a reversal back to the upside. Close back above the 10 EMA here will validate the 13 exhaustion warning that we're receiving right now from the Tradesight seeker. Alright, now here's the oil chart. Oil was lower on the day, but even though it was lower on the day, it looks to me like it's going to be printing 12 days up now in the seeker count, so we're only 1 day away from a potential reversal here. So definitely keep a close eye on this for the seeker exhaustion warning, which is really, really close at hand. Gold, as you'd expect with the weakness in the XAU, was lower on the day. Didn't take out the prior day's low, but definitely weak on the day. 1625 is the next real area of support, and which is definitely something that all the big traders are watching. Also note that that 1625 area was tagged intraday here back in very, very early January. So that's going to be it for this evening. As always, please feel free to leave a comment below. And this has been Rich Derrick from Tradesight, and thanks for listening.